Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Last week, however briefly, the rally at the time was halted by the 50% Fibonacci line of the May 24 to May 25 move at 622.25. This is now resistance and is being reinforced, for better or worse, by the green short medium moving average, currently 622.5, with nearer, if limited, resistance from the lesser Fibonacci line at 616.25, perhaps more by the July 21 low at 609.25. Prices continued their push lower from last week into this week, down to and through just about the significant, if broken, May/July 23 to date upper bear channel line, currently at 599 even, which is highlighted in purple on my daily chart. I continue to watch this move lower carefully, as I have not as yet ascertained if this is a repair of the broken purple upper bear channel line or not. Nevertheless, and separately, prices have for now halted their decline, prompted by the combination of the congestion between 594.75 down to 588 even, as well as to a lesser degree by the slowly rising mauve medium moving average, currently 606.25. This brings me to my final point. It relates to my comments I made 2 weeks ago about this market developing a new pattern, how I think it has done so. I said then, and I quote, "I think we have a mid-April to date somewhat lopsided double top pattern, an Adam and Eve type. We're broken down through the key 605.25 level, so I'll lay out some potentials below. Not targets yet, but potentials, as we haven't fully stabilized below the 605 level. Thus, a primary potential will be down in the 561.5 zone, just under the long moving average, which is currently at 570 even, and a secondary harder to reach potential will be down in the 518.75 zone, just under the 38.2% absolute Fibonacci line at 521 even. It all now depends if prices can keep the momentum going lower, especially under the 588 to 594.75 congestion." End of quote. Nothing on this view has changed since then. I still have them as potentials below, and I will still continue to consider them as potentials, because it is obvious to me, or to anyone right now, that though we are below the key 605.25 level, we still have not stabilized under this key 605.25 level. Chicago corn. The key pattern here until 3 weeks ago had been a pretty good looking August 25 to January 26 dark blue bullish shift picture, which has been broken and is now retired. The break lower was created by a new bearish pattern formed since mid-April, which I warned about 4 weeks ago, a mid-April to late May double top. We were not fully stabilized under this pattern 4 weeks ago, but as I said back then, and I quote, "The depth of the move lower has prompted me today to start laying out some potential targets." Only potential targets right now, but potential targets below for this possible double top. Thus, we have a primary potential target down in the 454 even zone, a target which we have already reached, just about, and a secondary hard to reach potential target down in the 440.25 zone, close to the November 2020 high at 439.5. End of quote. By the middle of 3 weeks ago, we had reached the harder to achieve secondary target. Yet that was not all, as I continued saying 4 weeks ago, and I said, perhaps most interestingly, under the now rising gold long moving average, which is currently 448 even, I should also note that if we manage to get below this 450 level, then we could also trigger another bigger bearish pattern, a March to date larger double top pattern. So please watch this space carefully. End of quote. Well, in the middle of 3 weeks ago, we also went below the 450 level and further down through the 50% absolute Fibonacci line at 425, which is a story on its own. But importantly, we now had a March start of June larger Eve and Eve double top. For primary target down 432.25, a target we achieved late 3 weeks ago, and a secondary harder to achieve target X1 down in a 410 and 3/4 zone, which we came awfully close to reaching yesterday. Below the 50% absolute Fibonacci, the next support is the December 2020 low at 414 and 3/4, sorry, 414 and 1/4, one that has been tested, pierced, but not as yet broken. And this is the last support before target X1 and the February 24 low at 408 and 3/4, which sits just under target X1. The question now is whether, much as in the various weak markets, whether the action over June is a possible bearish halfway hesitation as a precursor to a much larger move lower, starting from late May to date. Right now, in my opinion, unlike the other weak markets, it does not have the structure of a bearish halfway hesitation. Especially I suspect the support lower down of the rising dark blue May 2020 today uptrend, it's currently at 405.5, looks like potentially ominous support. Watch this space. This view may change, but not right now. Kansas City week. In mid-May, after about a year, prices finally reached their topside secondary harder to reach target for a bullish halfway hesitation up in the 745.5 area, and have pulled back down ever since, breaking down through the significant supports and creating a new, smaller, more recent pattern, a small descending triangle pattern, which we duly broke out of on the downside 4 weeks ago, reaching both the primary and the secondary targets below. Now, the secondary target was notable as it was then just ahead of the rising mauve medium moving average. It's currently 635 even, and thus accounts for prices slowing their decline late 2 weeks ago, and also the reactionary move back up, making a weekly key reversal up last week. More on this weekly key reversal up shortly. In addition to these, I also mentioned how had the old doubled up broken bull channel in play as well, currently 633 and 3/4 to 667, and now this week the very original broken bull channel dating back from December 25 to February 26, currently at 597 even to 667 even. Now back to that weekly key reversal up. I was suspicious of it because I had also detailed what I thought would be some forceful patterns in operation, especially on the downside. You see, this move lower, much as in Chicago week, opened up the idea for a possible mid-April to date double top pattern, though I have to admit it's one very, very lopsided double top. Nevertheless, 2 weeks ago I laid out some potentials below, the primary potential down in the 627 even zone, which has finally been reached, and a secondary harder to reach potential down in the 578 even zone, right on the July 21 low and just below the slowly rising gold long moving average. It's currently at 583 even. I've since converted that from a potential down to a target, which is target X at 578. But I still stand by comments from 3 weeks ago when I said, and I quote, "Right now the secondary harder to reach target looks just that, harder to reach," end of quote. And that is still the case. It just looks harder to reach. However, I also back 2 weeks ago started to wonder if the recent hesitation over June might become the corrective hesitation part of a very large early May to date bearish halfway hesitation, potential initially down to the 606.5 zone, and a secondary harder to reach potential down in the 535.5 zone. This was back then early speculation on my part, and I thought that it might not happen, but as I said at the time, and I quote, "I'd rather get it out there now and look foolish than look a bigger fool if prices start motoring lower in between my commentaries," end of quote. Well, since then, today even, I've decided to convert them from potentials to targets. Target X1 at 606.5 and target X2 at 535.5 respectively. Please note, I still think that target X2 may be a target too far right now. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.